as the tax season deadline looms closer, or rather the deadline, knowing what to do if you have an IRA to save for retirement can be really confusing. So this morning we are cutting through the clutter and breaking down what you should do with your IRA contributions before you file your taxes. We're so pleased to have with us Chad Carlson with Delta Trust Investments joining us this morning to discuss individual retirement accounts. Chad is a certified financial planner. Welcome.
Thank you.
Good morning to you.
It's good to be here. I think I woke up the neighborhood rooster on the way out this morning.
Yeah, you said it was a touch early for you, earlier than usual.
Just the getting up part.
All right, Chad. Well, with tax season, the deadline's a month away. What advice do you have for our viewers?
Well, retirement, planning for retirement could be one of the biggest expenses that any of us are going to face. Mm-hmm. And so as a part of that, we want to take advantage of every opportunity there is to save as much as we can, and individual retirement accounts are a great way to do that. And so we've got a tax deadline coming up. It's usually April 15th. We've got a couple extra days because April 15th falls on a Sunday this year. Mm-hmm. But you have until that time. If you haven't already filed your return and you haven't made an IRA contribution, to do so.
Okay. Now, explain some of the differences between the different kinds of IRAs.
Well, there's really two different types. There's a traditional IRA and a Roth IRA. And both of them allow you to defer taxes on the money that you invest inside the plans. That is, you don't pay any tax on the earnings or on the interest in the accounts. And the big differences, though, are the tax issues with respect to the contributions and then on the withdrawals. With the traditional IRA, you get, in most cases, a tax deduction when you put the money in. With the Roth IRA, you don't. But when you pull the money out during retirement, with the traditional IRA, you typically pay taxes at that time. With the Roth IRA, they all come out tax-free.
Okay. You mentioned contributions. How much are you actually able to contribute to an IRA account?
In most cases, $5,000 a year. That's the contribution limit for 2011. And then if you're 50 or older, you can make it what's called a catch-up contribution. So you can make an additional $1,000 contribution. So $6,000 total. And then those numbers are going to be the same for 2012 as well.
Okay, Chad, if someone is wanting to open an IRA account, where do they go? How do they get this all taken care of?
Well, the best thing to do is talk to an experienced personal financial advisor or talk to a certified financial planner professional, and then consult with your tax advisor or your CPA. And then call us at Delta Trust. We have some terrific, easy to read materials that compare and contrast the different types of IRAs. And then if you want some more personal attention, we can meet with you personally, run a great retirement calculator, and then also help you look at what you're doing inside your 401k plan, how your personal savings play in, what impact inflation might have, and how all of that fits together to make sure that you're on track. And if you're not, we can help you put a plan in place to get